What's the best way for beginners to start investing online with just $100? As someone who gets asked this all the time, I decided to test it myself 4 years ago by investing $100 into 5 different opportunities you can start right from your laptop. Today, we'll compare these investments across 5 categories: learning curve, passive income potential, tax efficiency, risk level, and of course, results. Let's find out what worked best. First, individual stocks. First up, individual stocks. Exciting, right? It's like owning a piece of your favorite company, but is it worth the effort? Learning curve? High. Success depends on analyzing income statements, cash flow, and more. You've got to put in the work if you want to pick winners. Passive income? Moderate. Some stocks pay dividends, but most of your returns will come from price increases. Tax efficiency? Great, especially if you use tax-advantaged accounts like ISAs or Roth IRAs. Risk? Very high. The market's unpredictable, and bad picks can lead to big losses. My $100 investment in Samsung is now worth $67.76, a 32% loss. Ouch. But remember, I picked stocks randomly. Number 2, real estate investment trusts. Next, REITs. These let you invest in real estate without buying property. Imagine owning a slice of an office building and sharing rental income. Learning curve? Moderate. Easier than stocks since you're investing in property bundles, but you still need to understand property markets. Passive income? Excellent. REITs are legally required to pay 90% of their profits to investors as dividends. Tax efficiency? Great, thanks to tax-advantaged accounts. Risk? Medium. Diversification makes REITs safer than owning a single property, but downturns like the pandemic can hit hard. My $100 in REITs is now worth $110.52, a 10.52% gain. Steady growth, even with challenges. Number 3, cryptocurrency. Third is cryptocurrency. Bitcoin and Ethereum are like digital money with huge potential but wild risks. Learning curve? Moderate. You need to understand wallets, exchanges, and tokenomics. Security is key. Passive income? Moderate. You can stake or lend crypto for returns, but it's risky. Tax efficiency? Poor. Cryptos are heavily taxed in most places with no tax-advantaged accounts to shield gains. Risk? Extremely high. Prices can skyrocket or crash overnight. Invest only what you can afford to lose. My $100 in Bitcoin grew to $652. That's a 552% return. But remember, crypto is a high-risk gamble. Number 4, gold. Fourth, gold, a classic safe haven for protecting wealth. Learning curve? Low. Buy physical gold or ETFs with just a few clicks. Passive income? None. Gold doesn't generate income, it's purely for preserving value. Tax efficiency? Good. Some coins have unique tax advantages, but it depends on your country. Risk? Medium. Gold is stable but lacks the growth potential of stocks or crypto. My $100 in gold grew to $140, a steady 40% gain over 4 years. Number 5, index funds. Finally, index funds. These let you invest in the overall market like owning a slice of every major company. Learning curve? Low. No need to pick stocks, just invest and let the market grow. Passive income? Moderate. Dividends are reinvested automatically, helping your investment grow. Tax efficiency? Great, especially with tax-advantaged accounts. Risk? Low. Diversification makes index funds one of the safest investments. My $100 in an S&P 500 index fund is now worth $180, an 80% return. So what's the verdict? Crypto delivered the highest returns but with massive risks. Index funds were a reliable choice for steady growth. REITs offered decent passive income, while gold was great for stability. Individual stocks? A mixed bag unless you pick wisely. Remember, every investment has its pros and cons. Start small, learn as you go, and invest wisely. And don't forget to subscribe for more financial tips. Subscribe now and start your investment journey.